Okay, so you know how we like to do these deep dives, right? We take something interesting that you, our listeners, have shared with us, and we really try to unpack it.
Yeah, we kind of roll up our sleeves and get into the nitty-gritty.
Exactly. And today's deep dive is all about this YouTube video someone sent our way.
Catchy title, too.
It really is.
Cool.
Right now, test this pocket option strategy to make money online live trading.
From the trading teacher.
Ah, yes, the trading teacher.
Yeah.
Always helpful to have a teacher, right? But of course, every teacher has their own style, their own curriculum.
And that's what makes these dives so fascinating, isn't it? We get to see how different people approach the markets, what tools they use, what they're teaching.
Absolutely. And this video is particularly interesting because it's all about live trading.
Yeah, right there on the Pocket Option platform, which, for anyone who's not familiar, is a platform for trading options.
Options being those contracts that give you the right, but not the obligation, to buy or sell an asset at a specific price by a specific date.
Well, right. So there's a lot going on in this video. We see the actual trades happening on the screen. We see the indicators they're using to make decisions. And of course, there's the whole pitch about making money online.
The online income dream. A classic.
Definitely a recurring theme. And it's our job in this deep dive to break it all down.
So you, our listeners, can walk away with a clear understanding of what's being shown, what the strategy is, and how to evaluate those results they're claiming.
Exactly. Because remember, what we see online isn't always the full picture.
Never is.
Mm-hmm.
So let's start at the very beginning. What's the initial setup here? What's the foundation of the trading teacher's strategy?
Right off the bat, they tell us they're focusing on currency pairs.
Good old Forex. Always a popular choice.
It is. But here's the thing. They say they're specifically looking at pairs within what they call the A market.
I market? That's,
Yeah, it's not a standard term you'd find in a textbook or on a traditional trading platform.
so what are we to make of that?
Well, that's the first question we want to pose to you, our listener. What criteria are they using to define this A market? Is it based on volatility, specific geographic regions, something else entirely? That's something to consider as we move forward.
Because it could be crucial, right? If their whole strategy hinges on this very specific subset of currency pairs, we need to understand what makes them so special.
Exactly. And then there's the matter of payout percentages, which they bring up right away.
Payout percentages, so how much you can potentially make on a winning trade.
Right. And they emphasize that they're going for high payout percentages.
Which makes sense if you're aiming for those big, quick returns.
Exactly. They're very upfront about their high-risk approach.
High risk, high reward. It's a familiar concept.
It is. But it's essential to remember the flip side. High risk also means high potential for losses.
Couldn't agree more. So they've got their A market, they're targeting high payouts. What tools are they using to actually make trading decisions? What indicators do we see on their charts?
They highlight three main indicators. First up is the ZigZag.
ZigZag. That's a classic for spotting potential trend reversals.
Yeah, it helps to filter out the noise, those smaller price fluctuations, and highlight the bigger swings.
You can see the bigger picture.
Exactly. Now, the tricky part is they mention that the settings for their ZigZag are already pre-configured.
Meaning we don't actually know how sensitive it is or what specific parameters they've set.
Right, which is important because those settings can really impact how the indicator behaves.
So it's a bit of a black box in that sense.
Yeah.
Okay, what's the next indicator on the list?
Next up, they've got Donchian channels.
Donchian channels. Those are all about creating a dynamic range around the price, right? Like a channel that the price is moving within.
Exactly. And they specify that they're using orange lines and white lines for their setup.
So visually, it's probably pretty clear on their charts when the price is approaching the upper or lower boundaries of that channel.
Yeah, and traders often use those breakouts above or below the channel as signals for potential buy or sell entries.
But of course, no indicator is perfect.
Definitely not. And especially with Donchian channels in markets that are choppy or moving sideways, the price can break out and then quickly reverse.
Leading to those false signals, which can be frustrating.
Absolutely. And that's something to keep in mind, especially when we consider the very short time frame they're using for these trades, which we'll get to in a moment.
Right. Okay, last indicator. What's the third one they're using?
The final one they show is the stochastic oscillator.
Ah, the stochastic oscillator.
Yeah.
A momentum indicator that a lot of traders use to gauge whether an asset is overbought or oversold.
Precisely. And they mention using 3 periods for both lines of the oscillator, and they've got those classic color settings, orange for one line, white for the other.
Making it easy to see the crossover points.
Right. And crucially, they've set their overbought level at 70 and the oversold level at 30.
Pretty standard settings for the stochastic.
Yeah. So when the oscillator crosses above 70, it's often seen as a sign that the asset might be getting overbought, suggesting a potential price pullback.
And conversely, if it dips below 30, it could be a sign of oversold conditions hinting at a potential bounce. So they're looking at price trends, they're looking at momentum, but then there's the time element. When they actually start placing these trades, what kind of expiration times are we talking about?
Throughout the YouTube demonstration, every single trade they make is using a 1-minute expiration time.
1 minute. That is incredibly fast.
It is. It means that from the moment they enter the trade, they've only got 60 seconds for the price to move in their favor.
Talk about pressure.
Right. Requires lightning-fast decision-making and nerves of steel.
So is that always their go-to time frame? 1 minute for every trade?
Interestingly, no. They do mention that on their Telegram channel, they sometimes use 2-minute and 3-minute expirations as well.
So the 1 minute time frame might be specifically for this YouTube video.
It's possible. And that's another question for you, our listener. Why choose that ultra-short time frame for the demonstration? What are the advantages and disadvantages of trading on such a short time scale?
Definitely something to ponder. Okay, let's get into the trades themselves. The first one they show is a $400 sell trade. What can you tell us about that one?
So for this first trade, they've switched to a new currency pair. They invest $400 and execute a sell option, which is sometimes also called a put option.
And they're doing this because?
Their reasoning is that the price looks overbought. They point to the candles being right up near the upper resistance line of that Donchian channel. Remember the white line?
So they're anticipating a downward move.
Exactly. They're expecting the price to drop back down towards the support line of the Donchian channel, the orange one.
Makes sense. And what about the other indicators? Are they confirming this idea?
They are. They point out that the stochastic oscillator is nearing that overbought level of 70 and has started to turn downwards.
Heading towards that oversold level of 30.
Right. And they also note that the zigzag is indicating a high price point.
So they've got multiple indicators suggesting that a downward move is likely.
That's the idea.
Yeah.
And the result.
Drum roll, please.
It's a win. They make a profit of $768 on that trade.
Almost doubling their money in a minute.
Yeah, they were pretty happy about that one. They emphasized that all the candles stayed below their entry point and were red, further confirming the downward movement.
Well, that's a strong start. Let's move on to trade number 2. This time it's a $700 buy trade. What's happening here?
Right, so for this trade, they're on a different market. They say naughty market 2, which we assume means another currency pair.
Safe assumption.
Hmm.
And they're increasing their investment this time.
Yeah, up to $700. And this time they're going with a buy option, also known as a call option.
So the opposite direction of the first trade.
Exactly. And their rationale here is that the price now looks oversold.
So they're looking for an upward move.
Precisely. They believe the price is likely to bounce back up from this low point.
And did their prediction come true?
It did. This trade was also profitable. They even claimed a 92% payout on this one.
Wow, that's a huge return.
Yeah, they were quite excited about that. They said it was the highest for flicking option.
Clearly enthusiastic. And with that win, their balance goes over $1,000.
Another successful double up.
Okay, on to trade number 3. This one's a bit more mysterious. They put in $1,400, but the direction isn't immediately clear.
Yeah, this one's a bit ambiguous. They're on another new currency pair. They invest $1,400, and they mention clicking a different position for the market.
Different position for the market. That's not very specific.
No, it's not. But they do say they're doing this for trend.
So we can assume they're following some kind of trend they're seeing.
That's the logical conclusion. And they also mention that the price looks overbought again, similar to that first trade.
So even though the exact entry isn't clear, they're expecting a downward move.
Right. And they highlight that the zigzag has changed direction, now pointing downwards, which they see as confirmation of this downward momentum.
And what's the outcome? Another win?
Another win indeed.
3 for 3.
Yeah.
This trading teacher is on a roll.
So far, so good. But remember, we're only seeing a very curated snapshot here.
Of course. Okay, let's look at trade number 4. This time, it's a $1,500 sell trade.
Right. So another new currency pair, $1,500 on the line.
Anything noteworthy about their reasoning this time?
This time, they actually say they were being more cautious. They were waiting for a good entry point.
Interesting. So not just jumping into every trade.
Exactly. They even say they usually prefer to compound their winnings quickly, but here they're taking a slightly more measured approach.
Probably wise, considering how quickly they've ramped up their account balance.
And they also point out that the zigzag is indicating a downward line.
So aligning with their sell decision.
Right. And the result? You guessed it, another successful trade.
bringing their balance up to $2,800.
That's quite a run.
It is. Okay, last trade we're going to focus on, trade number 5, a $2,100 down trade.
All right, so for this final highlighted trade, they invest $2,100 placing a down trade. Basically, another way of saying sell.
Again, following the trend.
Right. And they emphasize that they're being careful leaving over $2,000 in their account balance as a form of money management.
So not going all in, even though they've been winning consistently.
Which is something to note. They're demonstrating some level of risk awareness.
Even within this very aggressive trading style. And the final outcome.
Another win, although they admit it wasn't an obvious win right away.
The price didn't immediately move in their favor.
Right. But ultimately it went their way and their balance climbs to over $6,000.
So let me get this straight. They started with $450, and in a reported 10 minutes, they've turned that into over $6,000.
That's what they're claiming in the video.
That is an extraordinary rate of return.
It's definitely eye-catching. And that, of course, leads into their call to action.
Because who wouldn't want to replicate those kinds of results, right?
Exactly. So what do they tell the viewers to do?
They invite everyone to join their free Telegram channel.
Where they say you can follow their trades.
So you can try to piggyback off their success.
That's the implication. And they also mention a VIP or private Telegram channel.
Ah, so there's an upsell.
There is. They promise more trades, more tips, even personal advice through direct messages.
For a price, we assume.
Presumably. So there you have it. That's the Trading Teacher's presentation.
A whirlwind of live trades, high payouts, and a tantalizing invitation to follow along.
So let's take a step back and think about what we've learned in this deep dive.
What are the key takeaways here?
First off, we're looking at a high-risk, high-reward strategy focused on very short-term trades using options.
1-minute expirations in the video, although they say they sometimes use longer time frames on Telegram.
Right, and their tool set is a specific combination of indicators. The zigzags, the Donchian channels, and the stochastic oscillator.
With those very specific settings.
Although some of those settings remain a mystery.
Intriguing, and of course the results they showcase are incredibly impressive.
Turning $450 into over $6,000 in 10 minutes is not something you see every day.
Definitely not. And they're very open about encouraging viewers to follow them on Telegram, potentially even pay for access to more exclusive content.
So this deep dive leaves us with a lot to ponder.
It does. And for you, our listener, we want to leave you with some critical thinking prompts.
Because remember, what we see online, especially in the world of trading, is often just the highlight reel.
The carefully curated best-case scenario.
Exactly. So as you encounter these kinds of videos, these promises of quick and easy profits, always remember to ask yourself some key questions.
What are the risks involved? How much capital are you willing to potentially lose?
Because in trading, losses are inevitable.
And always be skeptical of extraordinary results, especially when there's a financial incentive for you to sign up for something.
Do your own research. Due diligence is key.
Don't just blindly follow someone else's trades.
Become an informed trader. Make your own decisions.
And remember, the markets are complex.
There's no magic formula.
No guaranteed path to riches.
It takes time, effort, and education.
So be cautious, be critical, and keep learning.
That's the best way to navigate the world of online trading.
And with that, we'll wrap up this deep dive.
Until next time, keep those questions coming.
And happy trading, everyone.
But trade responsibly.